Today is the fabled Fed interest rate day. It is a big deal because when the Fed has these meetings, even in less important times, this is particularly important because they haven't had an interest rate raise in years. It's going to be a big deal, and it's going to make the markets move and so on. And we think the markets are going to move for at least a week after this Fed interest rate announcement. So we're super interested to see how the market plays out with it. I don't have all of our latest stuff up. We haven't put the charts out yet, but just talking about on the S&P yesterday, we were looking for the market to get up to once they had opened over here. This is a 2-hour chart, so every bar is 2 hours. If I blow this up a little bit, you'll be able to see it. We were forecasting early on that by the second 240 plus or minus a bar, they would be up at 42, 46 to 48. And this is the third 240 of yesterday where they did it. The second got as high as 42.39. They did shoot up and give us 42.55 in the third 120 of yesterday. So we were very pleased with that. And then our we have a larger indication that we think is underway. And I'm only saying this not because it's a forecast, but generally we are kind of leaning towards the bullish side as a final resolution to the Fed interest rate announcement. Now I don't want you to act on that because it's not really a forecast. I'm just being honest that we're sort of biased a little bit to the upside, that whatever they do with any spike or anything else, we think it's likely will resolve itself to the upside. But we can never be sure about that with the Fed interest rate announcement. We can be sure of our forecasts, like longer term forecasts where the markets are going to be. But in the very short term, you can easily have very discouraging movement against a larger position that you might be holding. So it's super important to be really careful every day, but particularly on Fed interest rate days. It's better to try to understand what the condition of the market is first before thinking about making money with it. And then when you do go to make money, you have a much higher likelihood for being correct about it. So I don't really have a lot more to say except we're super excited about the Fed interest rate. These are some of the things that we've done recently. On Monday, with the S&P above 42.13, we should advance to 42.40 to 41. We did that. We got up to 42.39.75. That's one tick off of 42.40. Then this was last week, and let's see what this one is. This is Monday, 3/14. Market's in a weak position and will likely decline to 41.68 from here. We were at 42.16. We got down to 41.68 and even lower. We got actually down to 41.52 before they're moving up. So yeah, it's very important to wait your turn and see what the market can show you. We have about 10 minutes to the Fed announcement, so I do want to chat with you a little bit. I'd like to hear what's on your mind or what are you doing. Listen, if you're not comfortable trading in the Fed interest rate environment, why not do what we do, which is that we're not in any position leading into the Fed announcement. We're completely flat. And then we're going to wait 30 to 45 minutes, maybe a little less, until after the initial reaction occurs. And then we'll put our judgments together and start getting down to business with trading. The volatility is going to be very large. You have to be ready for that and understand what it is that would make your position wrong, so that you can be wrong, but for very reasonable amounts of money. People who tend to hold on to losing positions, hoping that the market will come back. It often will come back, but during that time, you're missing out other opportunities. But further, there are going to be times when it doesn't come back and it's just going to go in one direction for quite some time. And that just virtually wipes out all of your previous gains. So you really do have to come up with a way to know where it is that you would be wrong in a position, and just understand that you'll learn to be right more often than you're wrong, and for larger amounts than you are spending when you're wrong. And that's it. And just, the quality of the trade is everything. Just really putting it together and not just jumping in and saying, I just want to make some quick money. It's very tempting, but it doesn't work out for most people. The stats that they give out for traders are probably worse than what they give out. But what is deceptive about those stats is, even if it's a small percentage of traders that can do well, that still represents an awful lot of people when you consider the total universe of people in markets. So it's not like there's 3 people, Ted, Steve, and Winston, that can all trade the markets correctly. If only 5% of the people do it correctly, all do the markets of various kinds. It's not that difficult to be one of those people. I would say it's more difficult to trade properly than it is to know what the market's likely going to do, because once you do know that, then you have to deal with trading it, and you have to learn how to manage the risk and so on. It's very satisfying to trade correctly and have a whole string of trades that are very good, and then occasionally just have to be stopped out, but reasonably, so that you're not giving back, your last 10 trades in a single losing position. There's nothing wrong with being wrong. The sin is staying wrong. That's where it goes all wrong, keeping your position on. Stu is here and he says, hi, David, any completions on gold since it had a large down move? Well, I don't have the time really today to go into gold, but we do have some bigger picture thoughts on it. Just give me a moment here. The week of April 4th is important to us, and daily closes above $1,906 are important to us. If they're closing below 1906, that has meaning for, so maybe that's a little bit helpful to you. Let's see. Thank you, Stu. Rob is here. Anything new for soybeans? We happen to be flat in soybeans right now, waiting. The soybeans aren't really interest rate sensitive in the same way that the S&P and bonds and some other markets are, but it's kind of quiet in soybeans right now. We're flat and waiting for a set of conditions to put us into something. So we're kind of just waiting on that. So thanks, Rob. Nice to have you here. Ed is here and he says, Tuesday morning on your TD Ameritrade session, you mentioned you were expecting 4101 this week or next. Are you still expecting that? On a TD Ameritrade, we said that the daily bottom of the 15th, actually it was the 16th, 15th that was the 1 day early, and that if the market, under the right conditions, if they really, what we've told everybody here is if we're below 4,300 on weekly closes, the market still is in a position for that 4101 that they could go down and touch or take out. I didn't get the chance to really clarify our whole outlook on it, but I did say that there was a daily bottom, but that we were going to sort of disregard it. That was the bottom the other day, a couple days ago, that we were going to disregard it basically until we had a little more clarity from the Fed, because there's a lot of volatility that comes in with this. So if we're below, to clarify for you, if we're closing this week below 4,300, that's not good. Normally, we don't expect to see that. We're kind of biased to the upside, even if we have to dig down a little bit before closing the week. We're bullish a little bit on this Fed announcement. That's just kind of an opinion of ours. It's not really a forecast. But if we did close the week below 4,300, I think that's a weaker position. I know that's a weaker position for the market. So a lot of what we were hoping would get satisfied did get satisfied on the upside already today. The only like another 10 points is in the market for the initial target that we were looking for on the upside. And that's what we're waiting on, right? In the Fed announcement here to see how that all plays out. So yeah, I didn't get a chance to really explain the full picture of what we're looking for. As you heard in that meeting also, we're looking for crude oil to trade back up at 102 to 103 in the third quarter of this year and as early as the second quarter. And we have some, if crude were to hit $87 or $88, which there are some indications for, and firm up on that prior to the third quarter, you better believe we're going to be looking to either just be straight long or to be buying pullbacks in uptrends towards those targets. So that's something that might be useful to those of you that are interested in crude. Fred is here and he says, don't forget he speaks often at 2:30 for a while, may take a question and comment, then have the biggest move. Absolutely. A lot of the big moves are not just from the interest rate, but in this case, it is a big deal, the interest rate, right? This is one that we haven't had an interest rate rise in many, many years, or whatever the number is. It's a big deal. It's a statement, even if it's a quarter point. And then their forward-looking comments are very important as well. So well said, Fred. Thanks for the clarification, Ted. He says, thank you, Ed. I appreciate that. Yeah, on that program, I'm not able to do and really go into the detail that I want. There's limited amount of time. But yeah, it's very important to manage your position. And if you're not comfortable trading in this volatility, wait for the spike, the initial reaction, let it shake out a little bit. Don't worry yourself. I mean, a lot of times men, they're just so nuts about, oh, I missed the move, or yeah, that's right, you missed the move. You're missing whole universes being created and imploding, right? You're missing all kinds of things, right, in life. Just relax and let the market show you positions that you understand. It's very fair with its distribution of opportunity to people at their own level. If you could trade exactly at the level that you're at and only trade when you see things that represent that level, you would do a lot better than you're doing now. And this is true for every level. It's true for me. It's true for anybody else. True for all of us. If you could just simply take trades which represent your level of understanding, you would do much better than trying to reach and grab stuff that you really don't, but you're kind of hoping it works. That's not what this is all about. It can be, that's what it's all about, but then it kind of turns into gambling. So I really love doing it, but because it can be done correctly, not because I'm gambling. And that you ask yourself sometime that question, are you doing this because you love it? Love gambling, or that you really love trying to get it really right and put it all together? You can get it really right. It's really doable. Okay, so listen, we only have about a minute left. Sorry I have to go early here, but let's all take a look at what the Fed does. Thank you for coming. We'll see you here tomorrow. Stay well. See you then. Bye-bye.